Welcome to the first episode of Fundamental Focus. In this video, we are going to do a deep dive stock analysis into a giant in the banking industry, JPMorgan Chase, stock ticker JPM. Before we begin, please note that everything in this video is for general knowledge and informational purposes only and does not constitute investment advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Let us begin. With a market capitalization of over $850 billion and with about $3.8 trillion of assets under management, JPMorgan Chase is the largest bank in the world ranked by market capitalization and the largest bank in the United States when ranked by asset under management. It is undoubtedly the leader in the banking industry. Just to clearly see how large JPMorgan Chase is, let's compare it with its biggest domestic competitor, Bank of America. To do that, we go to the website aistockpal.com and use the Stock Battle feature to compare the two companies. In the most recent quarter, JPMorgan Chase has demonstrated substantially stronger financial results than Bank of America. JPMorgan's revenue is 1.6 times Bank of America's, and its net income is over twice as large, clearly indicating superior profitability. This financial dominance is why investors are assigning a premium valuation to JPMorgan. The market reflects this perception. JPMorgan's market capitalization is more than double Bank of America's, and its higher price-to-earnings (PE) ratio of 13.94 stands in sharp contrast to Bank of America's 7.98. Although Bank of America's stock has had a solid 32.51% gain since last year, JPMorgan Chase has surged even further, outperforming the entire financial sector with a 50% rise. This exceptional performance demonstrates JPMorgan's clear industry leadership. JPMorgan Chase's strong stock performance can be attributed to following three key factors. The first factor is the leadership of CEO Jamie Dimon, a highly respected figure in the financial industry. Dimon's reputation is immense, stemming famously from his successful navigation of the banking giant through the 2008 global financial crisis. He acts as a key magnet, attracting business and individual clients to JPMorgan for their comprehensive financial needs. Second, JPMorgan Chase is a powerhouse built through numerous mergers and acquisitions over the years. This strategy has resulted in a highly diversified portfolio of financial businesses, establishing numerous, resilient revenue streams. Most recently, JPMorgan acquired First Republic Bank after the latter experienced a bank run. This strategic acquisition instantly provided JPMorgan with First Republic Bank's lucrative high-net-worth client base, substantially bolstering the banking giant's earnings potential. The third crucial factor is the firm's massive and ongoing investment in technology. JPMorgan Chase functions not just as a financial institution, but effectively as a technology company, a sentiment famously expressed by CFO Marianne Lake during a 2016 Investor Day. This isn't just talk. In recent years, JPMorgan has heavily invested in upgrading its infrastructure, building new data centers, and deeply embedding artificial intelligence into its daily operations. For example, the firm allocated a significant budget of $18 billion for AI and technology this year alone. These profound tech commitments led one Wells Fargo analyst to famously dub JPMorgan the Nvidia of banking and urge everyone to buy the stock. These investments are critical for automating processes, mitigating risks, and enhancing employee efficiency through the use of AI. By doing so, JPMorgan maintains a formidable competitive advantage in an increasingly digital financial environment. The question remains, what's the outlook for JPMorgan stock? Can it maintain its upward momentum? Jim Cramer of CNBC is decidedly bullish, predicting that JPMorgan will be the next stock to reach a $1 trillion valuation. His rationale hinges on two factors. First, Cramer believes JPMorgan has something special, excelling across multiple areas including lending, capital markets, and trading. He highlighted the statesmanship of CEO Jamie Dimon, calling his performance rare for any industry. Additionally, he noted the bank's unmatched global reach and its success in becoming a fantastic place to work. Second, the real rocket fuel for the stock is the expansion of its price-to-earnings multiple, which means Wall Street is increasingly willing to pay a higher premium for bank earnings. He believes this multiple expansion is a hard-fought move that will not be easily reversed. That concludes this episode of Fundamental Focus. We hope this video has provided you with valuable insights. Please show your support by liking this video and subscribing to our channel for all future contents. Thank you for tuning in, and we wish you a wonderful day.